Yeah, I think some period of consolidation. We've gone through a period of very low volatility in the markets, and typically that ends with a period of turmoil where you get some readjustment, a lot of back and forth. When you look at the economy, we've got a lot of strength currently. I mean, we get third quarter GDP numbers coming out next week, which should be pretty good. But there's this fear of the future. And last week, people were asking, well, what's causing the downturn? And it's not really anything, but it's everything. I don't think there was any one real catalyst, but this whole laundry list of concerns about the economy, tighter Fed policy, the trade policy disruptions, risks to the global economy, and so on. And I think that's kind of, so it's really fear of the future, even though everything right now looks pretty good.
People pointed out that last week could either be seen as the beginning of something significant in terms of the market pulling back, or it could be towards the end of what we are already seeing as far as a stealth sell-off. But 5% in 2 days in the Dow will get your attention. I think it was 4% for the week total or something. I mean, those are small numbers still. I mean, we get a lot of bang for our buck now in terms of wringing out complacency, because 1,000 points used to really sound like a lot, but at this point, 1,000 points is 3 or 4%.
That's right. But the strange thing for me is, I'm the company economist. I get calls from the retail network. I get calls from the press, and I've been getting a lot of calls about recession. When's the recession coming? And part of that is, well, you got to have some news to report or whatever. But I think that concern, and we're going to get this back and forth where the numbers still look pretty good, the economy still looks pretty good in the second half of this year, but there's that worry off and on about what's going to happen 2019,
That's like
2020.
We have nothing to fear but fear itself?
Something exactly like that. We don't see any real signs of recession on the horizon at this point. We're never due for a recession. The fact that the expansion's been so long doesn't mean that we're going to have a recession. But if enough people believe that we're going to have one, then that could become self-fulfilling.
Small caps gave us an indication of maybe what was coming last week, I guess, right? Now the valuation differences have narrowed to some extent, I guess.
Well, we always get excited this time of the year, right before earnings, because we take direction from a lot of the large cap companies. I mean, they're the customers and partners of small caps. So what we're going to listen to from CEOs is kind of their perspective, their investments, what they're looking to do, which should then hopefully benefit the small cap area. One area that we have been watching is the high yield market. It has been coming in. That's somewhat of a proxy for small cap companies. It hasn't completely collapsed. We haven't seen a panic in the area, but we have seen some pullback correction, which right now we think is quite healthy. We also agree we don't see a recession on the horizon. The yield curve is
supposed to be the year for the small caps, though, because if you're having concerns about trade and a lot of big other issues, these would be the companies that would be immune from that.
One would think so. What we also have seen, though, is the Fed, while raising rates, has been allowing volatility to come back into the marketplace, thereby PEs are being compressed, and that's masking some of the underlying growth that we're getting from, tax reform and other deregulation, which we think still will benefit companies, have a tailwind, maybe not as much as we saw in the first half of this year, but we have a very pro-business administration that we think is going to continue, into next year.